we've got another very busy week coming up, and it's quite possible that the macroeconomic news will overshadow the corporate stuff. That's because we've got two key interest rate decisions this week, the US Federal Reserve on Wednesday the 2nd and the Bank of England on Thursday the 3rd. Now, according to the CME FedWatch tool, there's only an 8% chance of a Fed rate rise in November, but 68% in December. Meanwhile, the focus with the Bank of England will be whether Mark Carney sanctions a second interest rate cut or not, as he hinted he might do alongside the first one back in August. Now, company-wise, 13 FTSE 100 firms will be releasing trading updates of some kind or another in the coming week, and they include oil major BP on the 1st, retail bellwether Next and house builder Persimmon on the 2nd, non-life insurer RSA on the 3rd, and publisher and events host Informa on the 4th. Now, as we gear up for Guy Fawkes Night on Saturday the 5th, the stock that could spark a few fireworks one way or t'other in the week ahead is grocer Morrison. The FTSE 100 firm is due to release its third quarter trading statement on Thursday the 3rd. The ongoing price war with discounters Aldi and Lidl is raging on, and it's well known what a tough business this is. Morrisons and its main quoted rivals Tesco and Sainsbury, well, they've all cut their dividends in the last couple of years for starters, as profits have come under pressure. However, as we can see here, Morrison shares have begun to forge a bit of a recovery over the last 12 months. Now, under boss David Potts, who took over in March 2015, Morrisons does seem to be making some progress, and these third quarter figures will be a key test of that momentum. The important numbers to watch are the like-for-like sales numbers, which have grown for 3 quarters in a row after what was a desperate spell. So let's see if Morrison can keep this going after the second quarter's 2% increase, excluding fuel and excluding VAT. Also watch for comments on the following topics. Morrison's cost-cutting plan. Potts now expects to exceed the original $1 billion 3-year goal by the end of this fiscal year. That's ahead of expectations. Further debt reduction as the company reduces stock and working capital, also boosts its profits. And finally, Brexit and the weak pound. We've seen Tesco come to blows with Unilever over product price increases, so it'll be interesting to see if Potts says anything on this particular topic. Now, the chief exec's still got work to do, especially if he starts to face cost pressures that he needs to either swallow or pass on to price-sensitive customers. The latest Kantar World Panel data also shows that Morrison's market share is still under the cosh, at 10.4% against 10.9% a year ago. Now, that said, the company's increase in its interim dividend suggests confidence may be building, so let's see what these third quarter figures reveal. Thank you for watching, and I look forward to seeing you next time.